Hi, welcome to US Business News. Today, money topic, we are going to cover the basic Bitcoin, basic real estate. Why? Because it creates wealth. So let's start with basic real estate terms. Just learn real estate. It doesn't matter where you are anywhere in the world. It's a little different for everybody, but it's the same. Number one, if you want to buy real estate, you need to know there are two players, a buyer, a seller. The seller owns the property. Property, when we talk about, is like a house, a condo, or a townhouse. Okay, so when we think of real estate, we think about the interior of the property, single family home, condos, townhomes, and villas. Okay, that's what we have in the United States. In order to own property, you're going to need money. Okay, why do you need money? Because a property costs money. Let's say you're buying a 3-bedroom 2-bath in Margate, Florida. It's going for $300,000. It's a townhouse or a villa. That's a property. Do you have $300,000? No, you don't. Who has $300,000? The bank. Go to your local bank. You're going to apply for something called a mortgage. How do you get a mortgage? The bank is going to do due diligence to see if you can get a mortgage. You are going to provide documents to the bank, and you're going to provide a down payment. What's a down payment? Skin in the game. 90% loan to value, 80% loan to value, or FHA. Those are the programs we have in the United States. India and other countries have other programs. Either way, most banks all over the world require down payments and documentations. These are things that you need to know. Gather your documentations now. Work on the down payment as you go along. Okay, so what is it you need? Income. You need the property. So even if you do not own the property, just go on Zillow, find the location you want, find something in your price range, and you could just put that one, anything for sale. Just give the bank a starting point. This is the property I like. Do not wait to sign a home. Get a pre-approval. Get bank loan approved before you go house hunting. You're wasting your time to go house hunting, then bank approval, because you do not know how much you can get. Only the lender knows how much you qualify for. So you're working on a pre-approval. Let's say the house is $300,000 US. You go to the local bank and you present with them your 2 years of tax return, your two most recent tax return, 3 months of recent bank statements, and they're going to want to pull your credit. They want to make sure that your credit is good. Okay. Make sure that your debt is reduced. Do not go there with zero debt. That's not possible. Plus, you need a little debt. But make sure that your debt is reduced. The lender looks at debt to ratio. Okay. Banks are conservative beings. Okay. They'll give you 20-30%. In India, it's 40% of your income towards the mortgage. Let's just use numbers. Let's say you make $4,000 US per month. The bank is going to have different stuff that you're going to subtract. They do not calculate food. They calculate certain items, the leftovers. So they do a back end and they do a front end. Bottom line, you need income. Lenders love to see 2 years worth of work history. It means that if you are 20, you'll be able to buy real estate because you already did 18, 19. I bought my property first at 21 or 22. The bank is only needing 2 years of history. They love to see you're in the same line of work. Why? It shows stability. All right. So it doesn't matter that you switch employees. If it's the same line of work, they love it. Okay. So what if you don't have the down payment? That's not a problem. You can start saving for the down payment. You can get a gift from primarily your friends. In the United States, you can get a grant, or you could do FHA. The most important thing is the down payment and the documentations. Without the down payment and the documentations, the bank will not be able to give you a loan. You need to get a pre-approved letter in this country. That's what we call it. In India, they have another name for it, but it's some pre-approval, and every bank does due diligence. Gather your documents today. and go to a lender to see if you can get pre-approval. What's a pre-approval? It's the fact that you can get money to buy a house, and it tells you how much the bank is going to lend you and what the payments are. You are going to be paying back. Okay, so let's say if the house is 300, you put 10% down, 30. Then you owe the bank 270. The bank is not going to say, give me my 270 now. That would be impossible. Obviously, if we had it, we'd give it to them. They're going to take the 270 over a stretch. Some countries is a 10-year mortgage. Some is 15. In the United States, it's 30 or 40. Okay, so let's look at the 40-year mortgage in the United States. So the 270 amortizes over 40 years, which means you pay the increments in pieces. But the bank is making a profit. They charge you interest to borrow their money. Okay, the way to get out of the mortgage faster is by going ahead and paying more than you can. Pay one extra payment. All right, so location. Use Zillow to find a property. Make sure you go to the bank for a pre-approval letter. Eventually, after you get your pre-approval, once you're in contract with the seller, and you're the buyer, congrats, the seller, you're in contract with them. You will be doing a loan application. These days, loan application, they're on the internet. In India, probably loan application is at the bank. Go to your local bank. If you're in the United States, Google, there are 4,800 banks in the United States. They're now internet banks as well, and they're fintech banks. So just look for home loan mortgages and you'll have to complete the application. In most cases, in all cases, there will be a processing fee. In India, they charge the processing fee up front. In the United States, you pay the processing fee most of the time at closing. So there are going to be closing costs associated with you borrowing money. So keep that in mind. Even if the deal fall apart, you're still going to on the hook for closing costs. I like to tell people to consider 6% of the purchase price as a closing cost. So you have a down payment, which is 10% down, and then you have closing costs, which is 3 to 6% of the purchase price. Okay, sometimes you can finance the closing costs into the loan. Talk with your lender. You want to be able to say, congratulations, you've been pre-approved. This is what you have, a mortgage. This is what your monthly payments are. It's very important that you see what the monthly payments are and that you can afford it. Do not just go, oh, I got approval. Look at the monthly payments because you need to be able to afford it, okay? When you are in the process of buying, let's say you go on Zillow, you found a home, you're in the sell and negotiate, or you use a realtor, you got your pre-approval, then eventually the property needs to get a valuation. So the bank is going to evaluate your credit and your assets and your income, and the bank is also going to validate the property. Make sure it's appraising, which means if you're buying it for 300, the bank is going to say, is it 300 or is it more? Let's say that it comes in at 200. Don't take that deal then. If it's a 300 and 200. Also too, the bank will not lend you money if the appraisal value falls below what the loan amount is. They're going to ask you to come up with a difference, or else you go find yourself another property. In India, you're going to get an offer letter. In America, it's a pre-approval. So it's not very difficult. Give yourself 30 to 45 days. And even if you're rejected by one bank, go to another. Okay? It's a numbers game. It's just a numbers game. I've known people who've been rejected from 4 banks and they found it. So keep going for the loan. I'm Tisha Powell. Thanks so much for watching. We will be back another time. Take care.